Good evening and happy St. Patrick's Day, everybody. This is closing comments here on March 17th. Let's take a look at our charts and see how we started the week. The equity markets celebrated the holiday accordingly with a green day across the board. Each of our indexes closing decisively higher. Nice pullback here. We do see a nice little rollover gap here on these index futures as they rolled from the March contract to the June contract. That's the reason for this gap here. But nonetheless, nice upside today in the equity markets. Between Friday and Monday, we are seeing prices pulling back. A bit of a relief rally here after being in overextended territory, oversold territory down here following this 3 to 4 week decline. The S&P from peak to trough here pulled back about 10.5%. The Nasdaq has been the weakest, nearing 14% between off the high to its recent low. And the Dow remains the strongest at not quite 10. It's at about 9.8% peak to trough on this pullback here. This is a good corrective territory, offering good value on individual names and stocks. We are expecting to see resistance up here as price pulls back and tests the 20-day average and some of these levels, these prior levels from below. Anywhere between the 20 and 50-day average here, we expect to see resistance step in. In the near term, just oversold territory, seeing a bounce here. Whether it's just a pause and range trade from here or another leg lower, that remains to be seen. Just a tough environment here at the moment, but the bulls do have their work cut out for them with a lot of overhead supply to have to chew through on the way back out of here. So it's going to take some time to turn this ship around. However, we do have a Fed day on Wednesday, FOMC statement. Jerome Powell will be speaking with the Fed rate decision. We'll see how the Fed reacts to recent data as well as this recent correction we've seen in the markets. We'll see what their stance is and see what the course of action is for them going forward here. Soft Fed could fuel this thing to continue higher, however, just not really expecting much from them, just letting the market kind of go through a healthy correction here. In a general bull market in the long haul, just seeing a nice corrective move. Just going to take a little time to climb out of here is the idea, unless there's something major that comes from the Fed this week. So until then, wait for a follow-through day, stay defensive, and we'll see what old Jerome Powell has to say this week. Next up is crude oil. We are seeing crude oil roll from the April contract into the May contract right now. Today we saw an early bid on oil pushing up towards 68, which has proved to be resistance over the last week. We've traded for about 6, 7, 8 days here in the 65 to 68 range. Today we saw the bears continue to show resistance here at 68. Price also reacting off of the 20-day average here, around 68 on this May contract. Do expect to see follow through to the downside from here. I would like to see the bears maybe retest the midline of today's range before breaking lower, but if we see offers below 67, expect them to push back towards 65 and potentially below that from here on out. So downtrend remains intact. Bears are in charge here. Over in the cattle market, here's the April contract moving higher today. We do see that volume is at 22,000 today on April, with 30,000 contracts traded on the June month contract. So we will be discussing June going forward, as it is the new front month in terms of volume. Nice push higher to start the week. June is only inches away from new all-time highs, while August and beyond found new all-time highs today. Nice reaction over the last few weeks for the bulls. Expect the uptrend to keep grinding higher here in the near term. We are reaching up into extended territory across the board. So just be ready for a balance and pullback to come at some point. But at the moment, the bulls don't show any sign of really slowing down, so no need to jump in front of this thing. We are seeing the feeders roll into the May contract out of the April contract as well. Um, More all-time highs here. Same story, different name over here in the feeders. Nice bull trend looking strong and keep pushing to new all-time highs down the line. Expect a slow grind higher to continue in the cattle market. However, we are seeing on our overheated readings that the cattle market, with fat cattle being at 3.6 and feeders being at 4.5, these are just kind of some overextended readings that we're getting here, saying that resistance may be stepping in soon for the cattle market. So a pullback or a pause in the action could be necessary in the near term, but until we see some pushback from the bears, this thing is just going to keep grinding higher. So bulls are in a good seat or in a good position, and we'll continue to control this market. So next up is corn. Pretty quiet day in the corn market with price balancing out in a relatively tight range, not really going anywhere. Pretty quiet as we staying in between our pivots for the week. We'll need to see the bulls get back above 473 to 475, see price above, or see bids above the 50-day average before we give the bulls any sort of credit here. So in the near term, expect either some balance in this area and potentially continued downside on a lower time frame. We are seeing lower highs over the past week or so, with a low here at 456 holding price. We're seeing pressure being put down on this 456 bear pivot, so expect the bears to push down below that, as there seems to be lots of pressure here to the downside. So expecting the bears to continue moving, just might need to take a little breather here at the moment. So that's all we got for today. Just keep an eye out for the Fed day on Wednesday and more jobs data on Thursday to come in. More volatility is to be expected in the equity markets, while some of these commodities just keep on grinding in their trends. So that's all we got for today. Have a good night, everyone.